Hello, ladies and gentlemen. Good morning, good afternoon, good evening. I hope everybody's really doing well. And welcome to this new month, guys. And first of all, I wish each and every one of my community very happy Ramadan, Ramadan Kareem. And I am surely going to remember you, each and every one of you, and your family members in my prayers. I hope this Ramadan bring lot of hope, prosperity, and good health, wealth, and well-being for your family. And hope you guys stay safe wherever you are. So to begin with, we're just gonna start with the Bitcoin, guys, first of all. And so there is a very good news as well as there is not so good news. So first of all, the not so good news I just want to tell you is, so why I'm just going to tell you, or I'm going to start with the not so good news, because so that our mind is clear. Basically, we know the path, what is going to happen in coming days, and you don't expect much more from the market. Basically, I don't want to give you much hopium at this point, but this is how the candles, this is how the market makers, this is how the basically the players have shown us basically what's going to happen in the next few days or weeks or maybe months. Basically, if you look at the monthly candle, we have got a solid bearish engulfing candle on BTC. This is a very strong bearish engulfing candle. Basically, if you see here on the BLX chart, if you see on the Bybit, or you can see on Coinbase or any exchanges, except we don't have that engulfing candle, especially on the CMEs. But nevertheless, the only exchange that we don't have an engulfing candle, rest all we have an engulfing candle. The reason I'm not sure what exactly why we don't have the engulfing candle on the CMEs. However, we have an engulfing candle on every exchanges basically. So that's like a very solid. I would say a biggest sign that the market is very likely we are topped out. Because this is a monthly engulfing candle. If you remember, I mentioned a very similar sort of thing when we were in April 2024, made new all-time highs, that there is a solid bearish engulfing candle and there is a possibility that this is top, 80% probability that this was top, and this is exactly what we did. We did a chop up for a few months, and the market just went for a retest of almost close to 49k. The top from, I would say, basically 73,500 to 49k basically. So practically, if you look at the thing from the perspective of an engulfing candle, if you just draw the fibs of that engulfing candle, market normally revisits the level of either 1618 or 2 Fibonacci levels. I mean, that can be a very harsh retracement or the manipulation, you can say, but I would say 1618 is still very good, and 1886 should be held as a support in case if you really want to be very bullish and the market wants to go for an upside. And that's exactly what we did previously. So now if you draw very similar Fibonacci levels for an engulfing candle for the market basically, so this is your engulfing candle for the market for Bitcoin. I definitely see how the market is likely going to move in the coming days. Basically, in my view, what we are going to see for the next few days, or maybe you can say month, because this engulfing candle is going to take a lot of hell of time because it's on monthly basically. So the range you are going to play for a Bitcoin is going to be anywhere between $97,000 to $78,000. That's a huge, I would say almost close to 19k gap. So there is a delta of 19k. Basically, I mean, we need to play this 19k range. What do we want to make money? This is where the money is to be made. This is the range, $78,000 to $97,000. Now this can be slightly tricky as to how you want to play, but overall, what I'm going to do, or basically based on this engulfing candle that I'm watching, I would be aiming for a very solid harmonic basically for this sort of engulfing candle basically. So how does this engulfing candle harmonic plays out? Let's say this is our top for the market, and we are visiting almost 338 or 382 Fibonacci levels. I would want, so practically, if let's say if we do happen to get a one more dip down before a push up to 97, 98k, I would be looking to short the market as and when we proceed towards a golden pocket zone of 97.6 to 90 8K, and from there we will be looking for a bigger bloodbath on the market towards my initial target of 786 Fibonacci levels. That's where the market is likely going to bottom around for the bear market in 2026. Can even go for 886 Fibonacci levels around 25K. I mean, this can be the harmonic, the way we had a very similar harmonic over here. Now, the only difference between here is that we made higher highs over here at the previous one in 2021 because, the one more push was missing and there was no bearish engulfing candle over here. The only reason why I think that this is a possibility because we have a bearish engulfing candle. And there's a possibility the top might be in for the Bitcoin as well. At this point, it's still very difficult to say whether the top is in because we're still above the previous all-time highs of 69.182. So we are still above that levels. And hence, the Fibonacci level tells me that 2024 POC is 2024 POC to 61K or 59.8 is going to be a very good levels for a bounce, basically, in case if it's given. So overall, on the bigger term time frame, your mindset should be clearly set that we won't be going beyond 104K. That's it. 97, 98K max. We won't be going beyond, or even if we go there, it's just going to be like a wick, and we're just more likely going to dump further more. But I really don't think we will be, literally, retracing the whole monthly engulfing candle, and we should not be going anywhere beyond 102.7K. So that's like a bare limit. Even I would say we should not be going back above 100K. That's it. So this is what the plan is for the next few days or the coming months for BTC on the hard term time frame. Let's deep dive more into what exactly the market looks like on the monthly. So if you look at the monthly time frame, we are strongly having a very, very, very strong bearish engulfing, bear divergence on the Bitcoin. I mean, that's exactly what is playing out. We have a strong bear divergence. We don't have any bullish divergence yet. Also, the monthly have lost the RSI based MA under 68. We are under 50. We are under the 70 levels. So this is a slightly tricky part because whenever we lose it, we go down, not normally. So we chop a little bit. We go down one more time, form some sort of a bull divergence, and the market goes something like this. And then further we dump like this. And this is the very much best case scenario for the market on a monthly time frame, in my view, which means that monthly is bearish. Second thing, what you want to understand or what you want to check upon is whenever we start breaking under this trend line, it's not good, basically. It's never good. See, whenever we start breaking under, the market normally goes badly down. So I mean, this is what we have at this moment. The RSI literally closed under, and this is like, in my view, some sort of a danger sign on monthly, unless and until we reclaim this trend line on RSI on monthly. Basically, March is definitely, we are having a blood moon, so you can't expect much better thing from the blood moon. Blood itself means there's going to be a bloodbath. SPX is still being ready for a much bigger dump in coming days, and this is not looking some sort of a good thing at the moment. Yes, I would be very, very happy if we can just go one more damn time on RSI, make some sort of a bull divergence the way we had on USD DOM H4, and then we got a one last dump on the market. So I think this would be very, very nice. Just give us maybe one more down like this, make a strong bullish divergence, and then we go up retesting the RSI based MA, and then you go down like this. This would be very, very nice in my view. So let's see what we get it. But this is a very good plan in my view on the monthly time frame. If you look at the weekly time frame as well, the weekly time frame, we had a bear divergence. I've been very vocal about about this bear divergence we had, and it's been playing out. We closed I would say we are still under RSI 50, but we need to check it on CMEs as to what exactly the CMEs have in the mind. Because if you look at the CMEs, yes, the bear divergence, we closed monthly under the RSI based MA, not so good. The monthly candle is not good, basically. The CME gap is still not filled, and I believe we have our weekly MA50 weekly EMA50 around 76.7 on the Bitcoin. So I do think there is a possibility we can fill that 76.7 gap, or even can go to 74.8 basically before any some sort of a bigger impulsive move or a relief bounce towards 95 96k. So likely we are more likely going to see some choppiness in the market unless and until we are flipping 85.6k on daily time frame across the board, basically not only Coinbase, but we flip on CMEs, everything. Then it would be nice. Then it would consider that the local bottom is in, and we would be aiming from there 85.6 towards 97.6. Still, it's going to be roughly around $12,000 bounce, and we're going to play the 12k bounce definitely. So if you look at the CME weekly chart, yes, weekly lost RSI. We have lost the RSI on the weekly under 50, which is still the momentum is bearish at the moment. Yes, I would like to see some sort of a bounce on this, but it might take a little bit more time. It might just go down like this on the CMEs, and we might form a strong bullish divergence over here, like very, very, very strong hidden bullish divergence at the moment. We can say that once the RSI starts going down and the price holds above 59k, or maybe you can even say that it was $52,000, and which will hold at the moment. I don't really see price to dump under 69.1. So the weekly BTC CME is also bearish at the moment. Let's look at the Bybit and what other crypto exchanges looks like. Monthly Bybit, if you see, we have a bear divergence. We lost the RSI based MA, quietly not good, and trying to do some sort of a sideways a little bit. And then I would like to see, as I mentioned, one more down. To make a very strong bullish divergence. We have lost it. So some sort of a bearish retest and then dump would be really, really good. And then we go for some sort of a relief, and then further down. This is what the expectation from the market at the moment. Unless we reclaim or flip the trend line, that's a different story. Looking to the weekly RSI, the weekly RSI have lost again. On the Bybit as well, if you see, the weekly RSI is under 50, which is not good at the moment. And we're gonna see how the weekly closes, but this weekly candle is not so good at the moment, the way it looks like. We have a strong resistance around 89.2. That is going to be a range resistance. I will go deep dive into the lower term time frame, but right now we are watching what the higher term time frame looks like. At the moment, higher term time frame is not looking good at the moment. Monthly looks bearish, weekly looks bearish at the point. If you look at from the daily perspective, yes, daily is giving me some vibes that it has way oversold, basically, which means that the relief bounce, what we are watching right now is still some sort of a relief bounce. And what we can expect, some sort of a double bottom. So we go up, retest the 2930 levels, come back down like this. The RSI don't make lows, but the price make lower lows, making a very strong bullish divergence on the daily. And the weekly time frame will also pull that trigger to form a bullish divergence, and that way we can just simply run up. Normally I don't really see a V-shaped recovery from the market whenever we go over to a way oversold territory. So you see a very similar thing that happened previously as well in 2023 August. So the market, reverse, started giving some relief bounce, and then you made some sort of bullish divergence, and the price went up. Now let's check what the price did at this point of time. So when we made the lows here, and then the price, topped out here, and then on the daily time frame, and then we made some sort of a bullish divergence. So just look at the price, what we did at that point of time in August 2023. So in August 2023, what we did is the RSI. First of all, this is the candle where we made the bottom of the RSI. Then we started recovering a little bit, green candles happened. Then the further dump happened on the market. Now this is the perhaps chart, the Bybit chart, basically. And then what happened is the market, gave a very good relief bounce going ahead. Basically, the dump candle that we had almost retraced the 786 Fibonacci levels. So practically, this is exactly what we can aim for at the moment. You know, this is what we can expect. Do we have any other example of the oversold RSI? Previously, let's see. Yeah, we do have another example. Two examples we have as well. A very similar example. We go for like Adam and Eve bottom formation over here as well, as you can see. So this was the bottom, and this is where the bounce happened for a V-shaped recovery, and then we rejected, make a bullish divergence again. Similarly, we had the lows, the price retraced, and then further, this is where we went. These are the two scenarios we can probably look for, and the price went further down, and this was in the bear market, of course. So we need to look things slightly differently during this market, but overall the consensus is same. So the logic is still remains same. I mean, we got a very strong, sell off, you can say, on the daily, and then as you can see here, we got some relief bounce and then further dump like this, where the price made lower lows. As you can see here, this is where the price made lower lows over here, and the RSI made higher, not lower lows but higher lows sort of thing. Very strong bull divergence, and then we got some relief bounce across the board. Similarly, what happened here is we got a dump and then a green candle, some sort of a bounce. Price made lower lows, even RSI made lower lows, but overall this was some sort of a bottom formation at that point of time. So practically, even though we don't had RSI bull divergence, but yes, this was some sort of a bottom like scenario. So I do believe we are likely going to see on the daily, from the historical data as we are watching or we have seen so far, I think the price is going to chop between EM at 200 and the lows, basically 78k. Maybe even we can go one more down before literally getting some sort of a very strong reversal bounce. Basically, this is a very, very good possibility. So practically, if you look at from the daily perspective, we are right now backtesting the EMA 200. I mean, today we got a bounce towards 86.4. From the lows over here, it was almost close to 10% bounce. And as I mentioned yesterday as well, when the bounce was not even started, when we were here, that there is another bear divergence, H4 bear divergence over here on the USD DOM. I would not be looking too long over here. I would slightly, miss the move. It's okay. I'm happy with it because, I'm not worried about, missing this move, but I don't really want to miss let's say if this bull divergence, bearish divergence plays out for good, I don't want to miss a move from here to here, these levels, which is going to be Bitcoin going up to 97, 98k. So I don't want to miss this move. Practically, this is what I'm aiming for. I'm not worried about this one. I'm more worried about this one. This is what we want to make money on. This is a risky trade, and this is a less risky trade at this point. And if you look at from the perspective of Bitcoin, what I believe is, and what I feel is, from the Bitcoin perspective, the RSI is more or less going to be, or I would say even RSI on the daily might have formed a very good bull divergence as well. As you can see, so this was the lows basically, and the price made lower lows, and the RSI already made higher lows. I mean, this can be the bottom basically. This can be the bottom sign. So the bottom might be in, probably this might be the bottom, or maybe one more time. So what we can do over here is maybe we can just go one more time because we have a pennant on the daily. So normally the pennant tries to fill at least 50% before we jump up. Normally I've seen the way pennant plays out. We have an order block here. Basically, it's going to be the daily bullish order block. If you look at the price action algo, this is where the bullish order block, we have it. So the 81,289 to 81k is a very good levels in my view, from the perspective of if you really want to play the bounce. So just go one more time deep, and it should happen quickly basically, because the blood moon is coming, and the blood moon is more likely going to be on, as I mentioned, 13th of March, and that blood moon is not a very different blood moon from the previous ones. It's a strong bearishness basically. So what we might do is we might chop a little bit here and just form a range, basically a smaller range on the BTC, and during the blood moon we might do something like this, just a push dump, and then we go for push up to 95 to 97k as I mentioned, and then we dump like this. So this is the plan. Now it all depends on how this 10 days we are going to be doing it. So this is what the range looks like in my view. So you have the highs here, you have the lows here. So this is going to be your range. We would be bullish once it flips 85.5 on the daily. We close above and we can re-long again Bitcoin and the market basically. And we can aim for a V-shaped sort of recovery till the blood moon happens, or at least the bearish retest of EMA, 100 at least during the blood moon. And then we will see a pullback for a retest again or some sort of thing at that point of time. So EMA 200 is our levels, 85.6 is our levels on Bybit. Basically, this is what you really want Bitcoin to flip. Till we don't flip it, this is like some sort of a relief bounce, you can say, or you can say some sort of a automatic rally to kill the shorts or the bears basically. So this is what you really want to see. Also, if we can take out these highs, it would mean that this is a very good chalk, and I would like to see something like this and a run up like this. This is what you really want to see at that point of time. So you just need the chalk. A bullish chalk over here would be nice, and then a pullback to, as I mentioned, 81k. So this is going to be a very good inverse head and shoulder as well on the lower term time frame, and we can run up till the blood moon and then probably do something like this at that point of time. So overall, guys, right now at this moment, the March opens is looking flipped at the point, but we still have lot of data, lot of levels that we have not flipped yet. So this is what I have for BTC at the moment. A pullback is definitely happening in my view. There is no bullish engulfing candle on the 12 hours. There is no bullish engulfing on there was a bullish engulfing on 4 hour over here, which we could have played at 80k basically. This was a very good and a clean engulfing candle. The only issue with this was the US dominance was still above that danger zone, and which you can't take risk on. So it might just be a fake out, because I've seen a very good engulfing candles print a fake out. Like you can get many ample of examples if you just look at the past. This was an engulfing candle, a push up, and then what happened after that. So a very good fake out might happen at that point of time as well. So hence the better was, even if this, let's say the bottom is in, we get a chalk over here, you get a chalk, we get a pullback ABC like this, and we go for a push up at least to the 2025 opens around 93.4, and we will see at that point of time if we flip, we can go up to 97k deviation and then further dump. If not, then khalas, we will short it. But definitely my plan on the hard-term time frame is to play the bounce, whatever the bounce we are going to get it in the next few days, like from now to 10th of March or 13th of March, whatever the bounce we get it basically. So to play the bounce and to short it, we will short it. This time I won't miss it. I won't exactly go for the exact levels, but we are more or less going for a range, basically a specific range that we would be targeting and aiming for. Now, a lot of people might be thinking that this is a PO3 or something. No, this is not a PO3 basically in my view. This is not an accumulation. This is a clear M pattern and it's a breakdown. So practically, any pullback or a retest of 90.4 is likely going to see some dump towards 85 and maybe like a double bottom further up like this, and then further down like this. So another deviation and then further dump. Overall, the plan is to short the market eventually when we go close to anywhere close to 95.5 to 97k. Invalidation would be above 102.5. So that's what I would be aiming for. And the take profit targets, in my view, the first TP would be around 73.5, and later on the take profit targets would be around 69.1. So that's what I would be aiming for. This is my short for this would be the short for us. This is the limit. I would just probably not wait for 97k. Yeah. So this is going to be our short with a 33% move down towards 69.1, and I would be looking to short this. This is a very good risk reward, and this is a very good swing basically. And before we go on the towards 96 or you can say 97.7, I really want to long that for a scalp, basically, not a swing. So we will see how the market, gives us this chalk on the 4 hours, or how we flip this EMA 200. If we flip the EMA 200, then I will be looking for some sort of a long opportunities as well. If we flip it, then this is how I will be looking to look for some long opportunities, and the stop loss would be clearly under, this would be the stop loss basically, and the take profit targets would be around the previous month POC and to around 96.97k. So I know this is not going to be the good risk reward at the moment, but as and when we get confirmation that EMA 200 is clearly flipped, we'll move our stop loss back to back under 81k, and that's how we can make 2.9 to 3 hour setup by DCAing or by compounding basically. So this is how my plan is. Similarly, Ethereum, guys, if you look from the perspective of ETH BTC is still very bearish. As I mentioned, I really want ETH BTC to go back down to 0.0246 to complete the ABC move, and only then and then I'll be looking for some bullishness on ETH. So whatever BTC will do, ETH is literally going to underperform. If Bitcoin pumps, Ethereum will pump, but less pump. And if Bitcoin dump, Ethereum will dump more basically. If you remember my plan for Ethereum to sweep the lows that have played out, and my next plan was to go for a very good impulsive move basically for ETH, and in my view, I think 3029 is still on the table. Ethereum is not having any bearish engulfing basically. One thing you need to understand, but the problem is total crypto market cap has that bearish engulfing, you see, on the monthly. So that is quite a bigger problem that I have, and this is the total crypto market cap. This is a very strong bearish engulfing candle, and we had a very similar monthly bearish engulfing on the total crypto market cap back in 2021. We were in the bull run basically. So after that candle, the next few candles were like, next few months were like something like this. We went under for a chop, and your range formation was somewhere around the previous week highs basically. This was the range that we had. So similarly, even for the total crypto market cap, I believe this will be the range of $3 trillion to $2.56 trillion. This is going to be our range, and let me just draw it very clearly and very precisely. The parallel channel. Perfect. Now this analysis is is very important for you guys. You can make a plan. If somebody wants to make your trade plan based on it, this is going to be a concrete trade plan. You can make it. So the plan is for this month, how I am looking at, maybe we can push up to $3 trillion. A bearish retest of $3 trillion will happen, and we will go back down to 2.49 to $2.4 trillion. And basically, maybe it can even go down to $2.43 trillion. And then, the March and April, I see some sort of a nice range formation on total crypto market cap. So this is going to be our range for like 2 months. And in case if we break down this range under, if we don't reclaim this, okay, and as we have an engulfing candle, and if you really don't reclaim it, don't reclaim this range highs of $3 trillion, $3.02 trillion, I believe that the market is more or less going to go for the $2.14 trillion, the golden pocket zone. Basically, that is your bigger golden pocket zone. Now, this golden pocket zone is very crucial as well. And you can say that, this is going to also be like a trend line. So this is going to be some sort of a bigger, trend line at this point of time, basically around April, May. So this trend line is around $2.14 trillion. Okay. So practically this is going to 3.02 trillion is going to be your resistance, and 2.49 trillion is going to be your support at this point. And we are going to range in between. There's going to be a hell lot of choppiness in between at the moment for total crypto market cap. This is bearish. You can't say this is bullish. Nonsense. I really don't believe it. This is bullish now. If this engulfing candle wouldn't have happened, if bulls would have defended it, yes, we still had an open option for the market to pump up new highs to 3.94 trillion, the wave count that I have it. But now that we have the clear engulfing candles, clear with this, engulfing candle, you can't just ignore it. Basically, this is the engulfing candle we are talking about. You just can't ignore it. This is a very high degree of a very strong engulfing candle. The one we had it in 2021 July, and also we had a very not so high degree of engulfing candle, but something similar engulfing candle that we have it in 2022. That was like a bear market. So I'm just gonna ignore that for a moment. We are not in the bear market because this is not confirmed. But if you look at from the perspective of 2024, yes, we do had a very similar engulfing candle. So basically, what you can expect from the Fibs perspective on an engulfing candle. If I have to tell you from the Fibs perspective of an engulfing candle, just draw the Fibs, and the pullback should happen somewhere around 0.382. Where the hell is 0.382? Yeah, here. Or maybe 0.618 to 0.5. And the bottom would be around 113 to 114. Okay, this is the high degree of bottom. Similarly, the engulfing candle again over here that we had, just going to draw this so that we get a proper equation. So there are two engulfing candles. This one was a sharper engulfing candle, which means that the more sharper pullback means the market might not give you the market might not give you the sharper decline. So one is 1.13. We front run. Here the engulfing candle was like a perfect engulfing candle, no sharper decline, and hence at that point of time we went slightly beyond 0.5 Fib towards 786 Fibonacci levels, as you can see here, and 786 exactly. Sorry, or you can say 0.14 Fibonacci levels here, almost like 0.14 Fibonacci levels, and then the market start dumping back down to 1618 as we saw previously on the Bybit chart. So what we can expect next, there are two possibilities from this engulfing candle. If you draw the similar Fibonacci levels of the engulfing candle, what we can say is the 3.35 trillion is still a possibility. We can test those levels, and I'm expecting $2.4 trillion to be tested. The worst case scenario would be $2.14 trillion. That is going to be absolutely the worst case. In case if this is the top, a generational top, then yes, definitely we will dump a lot more, guys. So overall, total crypto market cap is also having a strong bearish engulfing candle, but the Fibonacci level tells me that the possibility of V testing the 3.35 is very, very good, very, very high. Now, if you look at, on the daily time frame, just look at the total crypto market cap on the daily time frame. Now, I'm not going to give you any hopiums over here, but we are holding, I would say we are still holding up the golden pocket zone of $2.55 trillion. And if I have to consider, let's say if I have to consider, this is wave 1, this is wave 2, this was a wave 3, and this was some short of a sharper pullback for wave 4. Basically, let's say one more down towards a 2.5 to 2.4 for the invalidation still is at 2.45. So if you do happen to get wave 4, we might just get this push in maybe somewhere around May or June. If we hold the levels of $2.4 trillion, we don't really want to see that going under. So basically, this can be, 1 to a deeper pullback for the wave 3, a deeper pullback for A, B, 1, 2, 3, 4, one more down, like, some sort of a bullish wolf waves over here, if you can form it. And we chop a little bit more, and then we can push up like this. This plan exactly goes and perfectly aligns. This plan perfectly aligns with this thing. If you look at the weekly time frame, or just check it the monthly time frame, forget about weekly, this plan perfectly aligns with this one, the deeper pullback. One second. So this plan aligns with this engulfing candle basically. So we hold the lows, we accumulate between the previous highs and so on, and accumulate happens, and then we go for one more push up, and then the market go nuts on the downside. Okay. Similarly, if we can just go down here, form base, this is going to be the range high, some sort of a thing. Then if we hold it here up here, we flip the $3.02 trillion like this levels, then we might see something like this. But the pump will happen most likely on altcoins because they are missing the move actually. BTC will pump it for sure. It will also move, but I really don't see BTC making new highs because of that strong engulfing candle. Ethereum don't have engulfing candle. Many altcoins don't have it except Solana. Solana is looking worse than I thought. If you look at the monthly chart on Solana, this is a very not so good candle basically. This is a strong engulfing candle, which means that Solana is topped out, guys. So don't fight for the trend. It's topped out. If you're stuck in Solana, if you're still holding the bags or something, I think whatever the bounce you get it towards $200 to 210, you should literally be exiting the market. Don't wait for it. It can probably give us a move on the downside. If I just draw the engulfing candle correctly on Solana, we are trying to make some sense out of this whole, engulfing candles and how to play the engulfing candles basically. Yeah, so the bottom would be somewhere around for Solana in case if it goes one more deep down along with everything else. Your bottom for Solana would be around $83 to $61. At least this would be the local bottom, okay? Not like the temporary, like the bigger bottom. And the range for Solana is going to be this. This is going to be a small range between 168.7 to 128.5. So whatever, let's say if we get a sweep on the downside here on the Solana, a reclaim of this, you can long it. This is going to be rejection, and again, accumulation is going to happen. If we go get one more push, this is going to be short, clean short. Don't miss this one. It's a clean short. The next target would be around $43 to $44, and probably 2026, something around that. So this is going to be the far worst target, and this tells us what the market might market might give us in the coming days, basically. So just play the range, okay? But still, we can make a lot of money out of it. Now the thing is crystal clear. The market is so crystal clear for me at the moment. That I have laid down my plans on how do we play it, and we are going to play some swings and scalps as well for sure. I can guarantee that. Okay. So this is the overall plan for the market, and as I mentioned, the BTC, I've checked it on daily as well. Now, if we go to the lower term time frame, we need to wait for the market to flip the EMA 200. Once it reclaims those levels, we are good, and we can long it. Now, if you go back to a very ultra lower term time frame, basically, very ultra lower term time frame, we can have our TPO and VWAP strategy, basically, and based on that, the price is above the previous day, value area high. Sorry, previous the value area high is around 84.85. So the price is above it. The price is trying to reclaim the VWAP, and as well as the price is above the current monthly opens. I think this can be some good scalp over here. Slightly risky one to take this, but it's a good one. It can make us, some sort of a 1.5 to 2 hour setup. Not much I can expect from this one. I'm not going to take this one. I'm going to wait for inverse head and shoulder. So let the price sweep up these highs, sweep up. Then we can, because this is going to be a very good 3 drive. 1, 2, 3, 4, 5. The volume is dropping on every highs. Basically, this is a clear 3 drive formation. So if somebody wants to take some risky scalps, this is what you can get it. But I'm going to wait for a very strong scalp. Basically, I'm looking for a very high probable trade at the moment. The high probable trade would be you take the highs, you take these highs, go for a pullback to the March opens and take the liquidity, or maybe just go back down to take the bigger liquidity here and then run up. This can be a very good interesting scalp. Basically, let's see. But right now, if somebody wants to take a scalp, this is where you can take it. You can also and you can target this liquidity pool that we have, and the order block, the 15 minutes order block. with your stop loss under the current monthly open of 1% can give you 2.93 hour setup if somebody wants to take that scalp, of course. Similarly, for ETH is bearish. We are still under current monthly open at the moment and forming some sort of a quite head and shoulder sort of thing. I am expecting ETH. This is where I would looking to long some ETH for scalps. 21562, 2135. This is the very good levels for ETH to long for a bounce. The bounce from there, you can expect at least a bounce of $100 from there. I'm not expecting something big. At least $100 would be nice. And maybe further down would be like a double the bottom sort of thing to run up this. So this can be a very good setup for ETH. And as I mentioned, I really want to buy ETH on the hard time frame. This is just like a very good pattern that we have. The only problem with this is, we have took this is our clear cut, I would say bottom or the range lows. Basically, you really don't want to mess with this one. This is your discount zone where you just need to buy, and this is now you're acting as a premium zone. This is where you sell, this is where you buy. So practically speaking, if Ethereum flips under like this, then the market is going to go and retest $1,400 basically. If it always start losing this, the way Bitcoin did, So BTC also lost the range highs, basically where the hell the chart is. Yes, here. So this was an M pattern, like a double top formation here. So you had an M pattern. So once we lose it, you get a massive dump on the downside. So if ETH also loses this, and we have a big problem. But I do think that ETH might likely not going to lose at this point. It's not going to lose that easily. But in case if it loses, then it's okay. I mean, we're just going to short it. But what I feel how it's going to play out along with BTC and everything else that we are planning for a $3.02 trillion retest, I think Ethereum is likely going to see maybe one more downside, like a double bottom or maybe 76 Fibonacci levels. Hold it up here, go for a run up like this. Again, come back down like a 3-tap setup, and then we run up like this to fill the CME gap till $3,300. This is where the CME gap is. We have two CME gap. One CME gap is here, the another one is here. So this is what I would like to see, and after that maybe boom down. This is what you can expect from ETH, or if you flip it up, then we can have like this. So it all depends. But overall, this is what the lower term time frame tells me. This is how you want to play. So practically, we are in the discount zone, $2,110 to $2,000, $2,100 to $2,000 is where you should be accumulating ETH. Whenever we go to close to $2,100 to under or till $2,000, that's where you buy spots and just hold on to it. Yeah, we should be doing it. Even if it loses, you will definitely get a bearish retest at some point of time to sell off your spot bags. So this is a very high probable, buy and a trade you can get for ETH. I mean, this is the very strong, high probable trade. As I mentioned, I've been in 100%, not 100%, I would say, but at least I would say 96% USDT at the moment. And apart from what I hold from, Waves, LDO, and Near, I think Near is also forming a very strong, good daily candle. If I'll just check it in a few. But overall, ETH, at least I'm expecting a bounce for like 20% move on and upside. Max it can go for like 50% move on and upside. It's just gonna take a lot on ETH to give that move on and upside for 50% after dumping this much. So it's not gonna be very, very quick. It's just more likely going to give that move more likely in April onwards, May, June, July. But this range formation is good because we have seen a very similar double bottom sort of thing like this. So this is some sort of a double bottom, sideways accumulation, and then run up. This is good actually. So let's see what this time ETH gives us. Solana is bearish, so forget about this shitcoin at the moment. We can definitely look for some pounds. Near, my plan for the Near, this is going to be last shot, and then probably be okay. Let's just check. I just have to leave for a moment. My daughter is calling me for something. So let's go for the SPX. Basically, please come on. SPX. Gold, guys, as I mentioned on the previous live stream as well, my plan for the gold is to go back down to 2,800 $815 to anywhere between $2,770, and we still are bullish on gold. But I'm expecting the blood moon to give us that further dump on gold to 2,770 for, like, one more push on an upside. So I think gold is going to give an intraday bounce to 2,884 to 2,885, further down towards 2,815 push up, and then down towards 2,770. On the gold, and after which I see gold will go some recovery. Now the recovery can be till 2,900, and then we dump like this, or we flip it up, and then we can make new all-time highs to 3,050 basically. So that's what the plan for the gold is. If you are playing my strategy for 2-minute scalping, or with the help of VWAP and EMAs, I think you have made a ton of money in the past few days. I've made good money out of it. It's a very simple one. Till the price under the VWAP, you just look for the short opportunities. That's it, class. So every damn time the price goes under the VWAP, you just short it. Short the EMAs. I mean, you short it here, and then you short it again. You literally try to short it here. You try to short it here. You try to short it here. Again, back to the entry. You try to short it, and then you get some good money out of it. So practically, this strategy is really nice. Once your daily target is achieved, like 2-3% move, if you have achieved it, then just don't overplay it, guys, because sometimes overplaying is not going to work for you. But this strategy is really good. So guys, this is it for today, and let's connect in probably evening as well, because I really need to monitor as to how the BTC and the chart looks like. But overall, in the lower term time frame, as I mentioned, you can take some scalps either here or at the POC. We are expecting maybe one more push up to the order block that we have around 87.8, and then after that some rejection going into it. So this is what, but I'm not going to play this scalp. It's the risk reward is slightly off for it. I'll just wait for it to give us this, this one, basically the chalk, and then just here, and then push up. This is where I would like to play. So for a very good scalps, basically. Okay, so that's all for the today's stream, and that's it. Have a nice day. Take care. Bye bye.